Hello everyone, welcome to Elliottwave-forecast.com YouTube channel. Today is May 24th and the chart of the day for today is Tesla. This is a 45 minutes time frame. We can see a couple of things here, right? We ended with 1 at 198.9, and that means we are currently in the wave 2 pullback. Now we notice here a couple of things in this move from here to all the way up to here. One thing here is that first of all, let's take a look at the move down here, okay, from this peak to this low. Now there are two possible options, right? Either you label it as an ABC, which is a 3 waves, or you might say, well, can I label this as a 1, 2, 3, 4, 5, right? Like a 5 waves. Because the moment you try to label it as a 5 waves, that actually opens up possible more downside. But it really doesn't matter whether you label it as 1, 2, 3, 4, 5 or ABC, right? We're calling it lower anyway for now, right? We're calling it for the downside. So it really doesn't matter. But I think if you can call this as an ABC, that will kind of gives further support to the idea this is not really bearish, because if it is bearish, this would have been a 5 waves down. But if this is actually a 3 waves, right, the first leg here is a 3 waves, then actually it's not a bearish market. Now if you do the extension analysis here, the Fibonacci extension, you notice here that if I do it with respect to the first and the second, or the A and the B, what we are calling as an A and a B, you notice here the entire leg here ended even without reaching the 100%. So that means, technically speaking, it's kind of weak, right? It's kind of weak because you have a, like, you can imagine we have 1, 2, 3, and the third leg, the entirety of this is not even reaching 100% of this. So then it's hard to say this is a 5 waves down, guys, 1, 2, 3, 4, 5, like this, 1, 2, 3, 4, 5, while this entire move is not even equal to this, because in the traditional impulsive structure, right, the wave 3 is the strongest and the longest. Usually it will, not always, but usually it is 1.618 extension of this. I'm not saying it's totally zero impossibility. This is happening 1, 2, 3, 4, 5, where you have the entire 5 waves and it's not even reaching 100%. I'm not saying that is zero probability. It doesn't violate Elliott wave, but it is less likely, because in the traditional sense, in the 5 waves, you have a very strong wave 3, and then usually 1.618, and then you get a 4 and a 5 like this. So that's why I would rather see it as EBC 3 waves rather than trying to label it 1, 2, 3, 4, 5 impulse, right? So so that means if you agree on this assessment, this is better to be a 3 waves, then you agree with me that this is actually not a bearish market, because a 3 waves is a corrective structure, right? All right, so now next let's take a look at this move up from here. Now that one was a clear 3 waves, right? You don't need to argue with me this is a 5 waves rally, whatnot. This is as clear as it gets, 3 waves, right? And the extension is also very, very classic textbook, 100%, then selling off, right? So what do we have here? So we have corrective structure down, which is bullish, but we also have corrective structure up, which is also, okay, let me repeat it. We have a corrective structure down, but we also have a corrective structure up. So if you say, well, it's corrective structure down, it's supposed to be bullish, but then the rally is also corrective. So what does that mean then? Well, that means it is a WXY structure where you got 3 waves down and 3 waves up, and then most likely we're gonna see another 3 waves down to complete the Y leg, right? Because WXY technically is a 3, 3, and 3, 3, 3, 3 structure. 3 swings down, 3 swings up, and another 3 swings down. So now this view is gonna get validated once it breaks below W. Then you know that, okay, we're gonna extend the downside into a bigger WXY. Is it a bearish market? No, it's not. Why? Because the first leg is still a 3 waves. It's not a bearish market despite looking for the downside, right? So the right side is still bullish because the structure of the move down is 3 waves. Now this is a 3 waves, yeah, but that's only in the shorter cycle that we can see a larger correction, but it is still a correction nonetheless. And as a result, I think it's still favoring the upside. Now if I zoom out on the 4 hour, I'm putting in the W and the X and the 1. Now you notice here a couple of things. This move up looks rather impulsive, right? Look at the behavior of the move. Looks kind of impulsive. This move down is sideways, laborious, typical of a correction. Let me get more data here, right? So according to basically what we are showing here, there's a possibility this extends into a Y. So it's a 3, 3, 3 to finish you with 2 here before it turns higher. So you might be tempted to sell, but I still don't like to sell because it's not really bearish in my book here. Because a lot of times when you're trying to trade every single thing, it ends up you're losing more than what you think, right? So here what happens is, assuming we can break below W, that will kind of validate the view we are going to extend lower, and then the possible target, which is not always going to be reached because it's counter trend, is going to be 100% of the WX, which is this 156, right? And then from this area, so you can assume it's going to hold above here. So basically, technically, this will be a potential support zone. I said potential because it may not even reach 156. It may even reverse before reaching 156.4, right? But if it reaches here, that will be a potential support between 156.4 on the way to this low. Now, you might say, what if I'm totally wrong? It's very bearish. It's going to break below 138. Well, then if you look at the daily time frame, that whatever that is, what was that? 138, right? 138.91 in the daily time frame was this one, right? Was this one. So so it broke above here, and then now trying to see if we can hold above this previous peak. So again, if you look at the daily, right? Yes, this one is kind of important, but I think the most important level is this one, right? 2023 low here. That one is the most important level for now, not this one. Now, if it breaks below here with this 138, you can still force it to be something like WX, and then that is your still within the Y leg down like this before turning higher. But this one is the most important level in my view, because I think if it breaks below here, which is the low 100, the logic says, well, then you're going to be opening up more downside into the 100% from the peak, like this, and like this, all the way down to negative 11, which is not possible. So because it's not going to go to negative number, so in a way it is running out of space to the downside. So you can assume it's going to hold above here. Now, so that is really the key level for Tesla. Now, what about this secondary low here? Is that a key level? You can, for now, you can take the more aggressive view against this, but if it breaks down, well, it's not ideal, but you still can call it within the same cycle from the peak here. So you can like WXY here, and then reverse again while it stays above 100 here, right? This low, which is the more important low, okay? But if I look at the shorter cycle, like I said, the assumption now is that it's going to hold above here, and the rally is kind of looks impulsive, so we can assume it holds. And then this one, if you agree with the assessment before, it looks better as a 3 waves, not a 5 waves, then we can say that because this one looks like a 3 waves, we most likely is going to be able to find another support if it reaches the next 100%, which is 156.4 for further upside. Okay, the only way that we're gonna get wrong is if this is actually a 5 wave. So actually this is 1, 2, and then this is wave 3, and then it's going to extend lower like this. It's going to break below here, 4, 5. Now if that's the case, then we go back to here. This is a 5 waves down to finish, but hold above 100, the lower here, the $100 here, before turning higher. Now I'm not saying this is the primary view. The primary view, just follow whatever we are showing. I'm giving you the alternate view, the less likely view, right? The less likely view. The more likely view is that we're gonna extend lower in the Y leg, and then we're gonna find support while it stays above this 139, and then turns higher again afterwards. All right. So that's the view here in the Tesla, guys. As always, if you want to get more updates on Tesla or any other stock, ETF, indices, Forex, commodities, feel free to check our service. We have 14 days trial. The link is in the description of the video. I'll see you all again next time, and have a nice day, everyone.